and notifying everyone that you're live, la la la. 3M, Cisco, Clorox, DG. Ryan, how's it going? Brandon, how's it going there, Mr. Brandon? Here every night. What a commitment. That is so cool. I'm kind of curious. What is it that I have to say that is so important that keeps you coming back every single night? Say the same thing over and over and over again. Buy, hold, sell, sell, sell. Max, Kathleen, Bob, Araspa, Slava, Roundman, American Recluse, Tom, Joseph, Abu Adan, Levi, Ride? That right? R. Lidle? I don't know. Austin, Joe, Scout. All these people showing up over and over and over and over again. And we have some newbies here. All right, so let's get started. Good evening, everyone. Who do we got here? Jack. Hey, bro, I'm from London, England. Who are we from? I'm from the Boston area, but at the moment, I'm in St. Petersburg, Florida. Charles, CB, Andy, Ray Cava. Okay. Cruz. More likes can attract more viewers. Keep it up. Woohoo! Yay! All right, that being said, anyway, let's get started. My name is James. This is Dividend Stock Talk, brought to you by The 10-Minute Trader. I am 60 years old. 60. Dividend Stock Talk, brought to you by The 10-Minute Trader, where I invest in dividend stocks for weekly cash flow, looking for a safe, predictable, consistent 1% per week. Divvy Dave, what's happening? Heidi, pleased to meet you. Bill Smith, what's happening? Michael, Trent. All right, so thank you there, Jack. I'm going to take that as a compliment. A little disturbing, but okay. Samson, how you doing? Don, how you doing there, Don? All right. So as I was saying, Dividend Stock Talk, brought to you by the 10-Minute Trader, where I invest in dividend stocks for weekly cash flow, looking for a safe, predictable, and consistent 1% per week. Now that comes to over 50% per year. Poseidon's Last Molar, how you doing? Colton, how you doing? John Peterson, how's it going? Market Sniper, cool beans. All right, so anyway, as I was saying, the trading strategy I'm about to share with you is the same strategy I share every single night. It hasn't changed since I came out with it 15 years ago. Now, 15 years ago, in 2008, my daughter, 9 years old, crawled up on my lap and said, Daddy, can you teach me to do what you're doing? So, cool. So, here was the obstacles I had to overcome. Number one, it had to be simple. It had to be safe. It had to be predictable, consistent, and no way that she could lose. Because what happens when a 9-year-old loses? Well, when she loses, she's going to cry. I'm going to feel terrible. Mama's going to get involved. I'm sleeping on the couch for a couple of days. I like the peace and quiet, but you know, it's not always a good thing. All right, so that being said, along with those 5 criteria, simple, safe, predictable, consistent, blah, 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 I had to come up with 5 rules this way to make sure she was doing it right. Rule number 1. Never buy something you do not understand. Make sure when you buy it, it is something you want to buy and hold on to for a long period of time. Okay. Rule number 2, never sell at a loss. It defeats the purpose of the whole endeavor. Rule number 3, make sure the company is consistently profitable. Me, I like 20 years of consistent increased profits. Okay. 4, make sure the company has weekly options, because that's where we get the weekly cash flow, from the weekly options. 5, make sure the numbers work. Well, what are the numbers? Well, what is the current price? What am I buying it for? What can I sell a covered call for? Now, a covered call is one of the safest trading strategies there is. And if you don't know what that is, Calvin Hill, how are you today? A covered call is one of the safest trading strategies there is. Okay, and if you don't know what that is, There's hundreds upon hundreds of videos available on YouTube and Facebook. They'll tell you exactly what a covered call is. You buy a stock, you sell an option against it, you're giving somebody the right to buy it from you at a certain price by a certain date. I like weekly options because weekly options allows me to do it 52 times a year. 52 times a year gives me 1% per week. That's over 52% per year. Excuse me for 1 second, please. All right, so let's get started with something interesting this evening. As I see, all you guys just signed in, said hi, all that kind of nice, neat stuff, but you didn't ask, what do we want to look at today? That being said, I got a nice list that I've been working on last week. Every week I come up with a list of stocks I want to take a look at next week and the week after. Well, I have a list here. Well, we have Dollar General, Chevron, Ford, Apple, Valero, Pfizer, Riley, Cisco, Clorox, Baxter, Philip Morris, PNC, The Gap, Southwest Airlines, ExxonMobil, Halliburton, Apache, Microsoft, Ford, Boeing, 3M, Newmont, Altria, Target, AVGO, love Dollar General. I do too, Samson. I hearing ya. Carnival Cruise Lines, U.S. Steel, EOG, Mosaic, Micron something, MU. What is that? Microdynamics, I think it might be. All right. Ooh, Line, huh? EL, you want to take a look at Line? Line's going to be a no, but I'll take a look at it anyway. Kohl's, and then Siri, because those are the ones we've been looking at last week that we found were a good opportunity this week. Now, as we progress forward, hey, Secretariat, how you doing? As we progress forward this evening, you'll hear me say over and over again, oh, that looks great. It looks like it will be better next week or 2 weeks or 3 weeks, so I write it into the book, and then we take a look at it a little bit later. All right, that being said, let's take a look at the first one, which is going to be Dollar General, DG. Love Dollar General. What did Dollar General do today? Ooh, kicked up again. Now, if you guys have been around VMC. Now, I've never heard of VMC, Chap Stevens, okay? But take a look at it. Micron Technology. Okay, Charles. It's already on the list, so we'll take a look at it. All right. First thing I want to see anytime I look at any stock is where's the high, where's the low, where was it, where is it, and what current direction is it going. Okay, so she's falling down, big, huge drop here. Now she found the bottom and then she's going up. It's very important that you guys know that you're going to make most of your money buying low and selling high. Well, if you like Dollar General, you're not going to get much lower than the low of the year, which was a couple of weeks ago. Now it's going to the upside. Well, look where the high is for the year, 170. We're currently at 86. We got quite a ways to go before we can get close to the high of the year. All right, so let's move forward and take a look. A year ago, we're at 114. The high was 167. The bottom was 77. Is that right? Hold on. 77.96. Okay, and that was on the 5th. So it was 2 weeks ago. Okay, so she went up, a little bit of a dip, and then look at this. A week and a half of just going to the upside. Well, I like Dollar General. Now, if I bought it tomorrow morning, 87.10, I could sell the 87s, which have 2 days left, and still get 1%. And a bunch of new locations opening, they're going to cover their losses easily. Well, alrighty then. Okay. So I can actually do the option for this week, even though we only have 2 days left, which is Thursday and Friday. Okay, but it's still, this week, it's still over 1%. Next week's 87, well, that's close to 2%. So it might be easy just going to next week and avoiding this week. Might be. Okay? Caleb, how are you? Lee, Brian, D, Greg, Joey, how's it going, guys? Alex, Doug, what's going on? So I like Dollar General, and it makes sense because you have your big drop here. It finally bottomed out for the year. This is the bottom of the year. This is not for the 30-day period. It's the bottom for the year. Okay, now she's going to the upside. Great. Next on the list, Chevron CVX. Ooh, another nice move. Check that out. Okay, here's the high. Here's the low. That's where it was. This is where it is. Look at the direction. She's coming down here, but she's bouncing off of the bottom. This is the bottom of the year. Again, just like Dollar General. The bottom's here a couple weeks ago. Now she's going straight up. Okay, but you got to ask yourself, hey, New York Boutique, how are you? Juan, ¿qué pasa, amigo? ¿Cómo está? Hello, James. How do you pick the strike price for each week? Well, it's an interesting question. And it's relatively easy. Think about it. If she's bouncing off the bottom here, let's zoom in a little bit closer. You should get a better idea of it. All right? Wait a minute. Wait, what's that? Oh, user 221682. You're back again. Be nice if you had a regular name. That would have been cool. But that being said, New York Boutique, I'm glad you're doing well. All right. So how do I pick the strike price? Well, that's relatively easy. All right, let's find out. A year ago, here's the high at 172.03. That was back in the beginning of October of last year. Okay, she drops, pulls back up, drops again. Last 30 days. Take a look at the last 30 days. Okay, 30 days ago, we're at 147. She dropped down a little bit, shoots up. Here's the high. The high's at 150. So from 150, she drops to the 30-day bottom right there. That just so happens to be the bottom of the year. Okay, that's the bottom of the year, 135. So from 135, you got 1, 2, 3, 4, 5 days to the upside, and you still have more room to go up because here's your bottom. Now she's going up until she slows down and turns around. Well, I like that because I love buying at a bottom and waiting for it to go up. So how do I find the strike price? Well, that's pretty easy. The last price today, 143.96. So I can buy it tomorrow at 144.50. The closest strike price is going to be 144. It's the closest one to what the actual purchase price is. And the 144 is going for 97. So it's not going to be for this week. I'm going to look out for next week because there's only 2 days left. Very rarely you're going to get a good fill for 2 days. But the 144 for next week is 197. That's well over 1%. Okay? So, it's currently at 143.96. And I want the 144s. Well, because that's the closest one. And it's going to give me over 1%. That's what I'm looking for. Safe, predictable, consistent 1% per week. Junior, Carl, Juan, I think you got enough of those likes in there, but I do appreciate that. Feld fam, how are you? Henry, how you doing? James Clark, Solomon, Ian, how are y'all doing? All right. So we looked at Dollar General, we looked at Chevron. Let's take a look at Ford. Here we go, Ford. Here's our high, here's our bottom, here's where we were, here's where we are, 10.98, the 11s for this week, 1%. Next week's just about 2%. So 2% might be a better deal. Okay, but let's take a look at the numbers. A year ago, Ford's at 12.35. The top of the year, 14.86. Oh, no, that's 14.63. Yeah, no, 14.85. 14.85 is the high of the year. The bottom of the year was on the 5th of August. Okay, look, here's the high. 3 weeks later, we're at the bottom after a big drop. Now she goes up, pulls back, and she's going up again. We're currently at 10.98. So the 11s look good for next week. Or you can do the 11s for this week, because the 11s this week is going to pay 11, which is 1%. The 11s for next week are going to pay 20 to 22, which could be close to 2%. Okay, but you got to ask the question, and it's always a good question. Do I like Ford? And do I like Ford at this particular time? Redneck, thank you for that. Bama Redneck. Bro, look disappointed to see my comment. Cornelius, what comment was that? Cornelius, do you use teeth? Well, of course I use teeth. Easy, I got my teeth. Silly question. I don't know why you would ask a question like that. All right, so anyway, I like Ford. The numbers work for me for Ford, and Ford is one of my fallback companies. And here's one of the main reasons why I like Ford. The current stock price is $10.98. Well, the book value is way up here at 14. Okay, 14 and change. So if you liquidate the company, sell off everything the company owns, well, that's your book value. Okay, they have what is that called? Balance sheets. Okay, credits and debits. Once you pay off everyone, well, what's left? Well, $14 a share. That's what's left. All right, so that's Ford. Next on the list, Apple. We all love Apple, AAPL. Now, I did buy some Apple this week. 14 billion debt. I have no idea what you're talking about, Mike. Do Robinhood offer weekly dividends? No, they don't. Dividend stock talk, is there a better time of year, line like end or beginning of the quarter? Edgar does life. Edgar, I'm not 100% sure what you mean by that. I mean, it sounds logical. Is there a better time of year? Well, better time of year for what? Okay, the stock market has been around for over 400 years. It's open 266 trading days a year. Okay? So Monday through Friday, no weekends, no holidays, and all you're doing is just trading paper, you know, because if you own a portion of the company, you're entitled to the dividends, or you're entitled to capital appreciation. Depends on what you're looking for. Now, just to let you know, if you're looking for capital appreciation, well, you're definitely in the wrong place. Oh, Ford is $40 billion in debt. Well, I don't know. Is that good or bad? I don't know. There's such a thing as good debt and bad debt. What is their cash flow? How quickly can they turn that debt over? I have no idea. Well, that's interesting. 40 billion in debt. I don't know if that's good or bad. All right. Anyway, looking at Apple. Here's our high. Here's our low. Here's where we were a year ago. Here's where we are now. Okay? Currently, we're in an upward trend. Great. I love upward trends. EV will bankrupt them. Yeah, well, it was a stupid idea. Do you remember the Edsel? Who remembers the Edsel? They did millions upon millions of dollars worth of market research to build the ultimate car that the people are just going to fall in love and trip over themselves trying to buy. That was the Edsel. Okay, so same thing with the electric cars. Every company is making them. Well, great. But there's one minor flaw when you come up with something that you're trying to force down the throats of the American public. If we don't ask for it, well, then don't tell us we need to buy it. Because if you think everyone's going to run on over and buy an electric car, well, you're crazy. I don't like them. Okay? Don't get me wrong, I'll have one eventually, but I'm going to make it myself. I'm not going to buy one of theirs. No, thank you. Too much crap involved. And I want to be able to work on my own stuff. But here's the thing. Like back in the 50s, when they thought everyone was going, it was because of subsidies. It was because the government forced them to do it. Not enough charging stations. That's not it either. Okay? It is physically impossible to get rid of all the gas cars and replace them with electric. Number one, the electrical grid can't handle it. Number one. Number two, where the hell are you going to get all the batteries from and all the copper? There's not enough copper to make the electric motors unless you can figure out how to make an electric motor without copper. It's just not realistic. Hydrogen would be more feasible. Well, kind of yes, kind of no, but there's no infrastructure for hydrogen. Okay, there is infrastructure for electric. It's just outdated and not powerful enough to satisfy the demands. Okay, and in some vehicles, it just doesn't make sense at all. Okay, you look at tractor trailers. You fill up a tractor trailer with diesel, that thing can go 1,200 miles. Okay, you put batteries on a tractor trailer, what are you going to get, 300, 400 miles? That's why we need bigger infrastructure bill in Congress. Oh my goodness. Don't start, okay? Please, I don't do politics because you really don't want to hear my politics. And that's not what we're here for. We're here for investing safely, predictably, consistently, gaining a 1% per week and making about 50% per year. Yep. Let's go back to the dividend stocks and stop talking about politics. I don't like politics. All right. All right, so high, low, where was it, where is it, where is it going, blah, 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 all that kind of nice, neat, fun stuff. But before we go there, let's check out the numbers and see what the numbers are telling us. Right now, it's at 222.27. So the 222.50s for this week are going for 142. Not quite enough money there for me. But next week's 222s are going for 285. That is well over 1%. It's really not that difficult. You buy a stock, well, great. If I buy it tomorrow at 222, I can sell the 222.50s, pick up 285, which is over 1%. And it's Apple. Apple ain't going anywhere. So let's check out the numbers for Apple. A year ago, Apple's at 178. Bottomed out in the middle of April at 164. We topped out at 237. When cars are introduced in the start of the century, there were hundreds of companies. Only 3 made it. Well, Poseidon's last molar, you're almost correct. At the beginning of the 1900s, there was 300 different car companies. Okay? I bet you've never heard of an All Days and Onions. It's actually a car company from the early 1900s. All Days and Onions. What a stupid name for a car. But it's actually a car. Okay, you got the Moon. You got the Nords. You got the Gaylord. There's a whole bunch of different companies. But in the early 1900s, yeah, there was over 300 different car companies. That was a lot. And the funny thing is, the very first car ever made, I think it was in 1847, was an electric car. The gas car didn't come out until, what, 1880s? Okay, so let's get off of that subject. Let's get back to what we're talking about. Back to Apple. Okay? Apple phone isn't going to sell well. Yep, I got that. Oh, no, focus. Yep, you're right. I got that ADD thing, squirrel. Anyway, high, low. Okay, we already did all that. Okay, so let's take a look at the last 30 days for Apple. Take a look. This is an invitation and a half. Okay, 30 days ago, 226. We jump all the way up to 233, drop down, move back up again, and then we gap down on Monday. Well, we gapped down on Monday. Tuesday was a higher. Wednesday was higher. So what do you think is going to happen tomorrow? Well, here's your 30-day bottom. Here's your 30-day top. What usually happens? Rich Bruner, thanks for the help this morning. Well, that's what I'm here for, dude. Okay, I'm kind of curious, Rich. What is your average weekly since you've been, since you've been doing that? Kind of curious. Luna. All right, Juan. One, do me a favor. Enough of the likes. Okay, that's enough. That's plenty. Okay, I appreciate it. I do. All right, Rich. So you made 20 grand. You make an average of 1.8% a week. Fuck, that's awesome, dude. Way to go. All right. Anyway, so here's your 30-day high. Okay, your 30-day high profit taking. Okay, so there was profit taking. Now we're down to 214. So now she's going to go back up again. So she went from 233 down to 214. That's a $20. That's over a 10% drop. I'm glad you like it. I'm up 7.4% this week so far. Good times. Good for you. All right, so let's continue. Let's check out the seasonality. Now, I love the seasonality. Okay, Juan, please, enough. Juan, enough. Okay, Juan, no more, please, enough. That's plenty, because you keep popping up. All right, so, Apple. Let's take a look at the seasonality for Apple. I love it. Absolutely love the seasonality for Apple. Take a look. Okay, now, for those you don't know, I want to start Who Can Help Me. User 6025740222063. What were your parents smoking when they named you, dude? That's a weird-ass name. But anyway, if you're really interested in learning, just hang out. Just listen. It's actually that easy. Just listen. Hey, check it out. Colgate-Palmolive, CL. We'll pull that one up. CL, Colgate-Palmolive. All right, so give me a minute or two. This here is a seasonality chart, okay? A seasonality chart on the far left is January 1st. The far right is December 31st. It actually shows you how the stock moves throughout the year based on history. Last year, the year before, the year before, the year before. I have mine set for 10 years. So I'm looking at 10 years worth of data. The blue line represents the movement for this year. This blue dot here is today. All the way over here to the left is January 2nd, because that's the first trading day of the year. Now, the red line represents the average movement. Look at the nice movement from January 2nd all the way up to December 31st. On average, it just goes up. So why not invest in Apple? If you follow the protocol, you cannot lose. Well, you're absolutely right, Rich. That's why I created it. I created it for my 9-year-old daughter to make sure that she didn't lose. Tony C., how's it going? Because it's not worth 3.3 trillion. Okay, we're talking about Apple, right? I never said it was worth 3.3 trillion. Only thing I'm saying is that look at the trend line. Okay, it has a tendency from January 2nd all the way up to December to keep continuing to go to the upside. So it keeps going up. Sword of the Spirit, cool beans. Honey Badger, what the heck is Honey Badger? All right, so I like Apple. It looks great. I did buy some Apple this week, just to let you know. Sorry, you hate Apple. All right, nothing wrong with that at all. You know, I don't have an Apple computer. I do have Apple iPhones. Okay? All right. Gen X poster child. I would like to see some pictures of the Gen X poster child. That would be cool. Milton, how you doing? Great. Please fix your TV. Okay, Milton, believe it or not, I got another TV right here that I just haven't gotten around to installing it yet because I couldn't find the base. So, and I can't put it on top because there's a marble top up here. All right, so sorry about that. I will get to it eventually. It's just one of those things. When you get to a certain age, it's like, well, honey, do this, honey, do that, honey, do this, honey, do that. Yeah, it gets a little frustrating. So anyway, let's move on to the next one. The next one is going to be VLO, which is Valero Energy. VLO. Whoops. Let me try that again. VLO of Valero Energy. Okay, so Valero Energy, first thing I always want to see is the high. Where's the low? Where was it a year ago? Where is it now? What direction is it going? See, from the high here, she drops all the way down, finds a bottom here, and turns around and starts going to the upside. I love it when it does, when I do that. I translated the Arabic pseudonym. I know you couldn't read it. Well, I thank you. Honey, that's your name, Honey Badger? That's a cool name. That TV looks smaller than what you have. Yeah, I know that. Well, actually, it's laying on its side. So if I pick it up and turn it, it's about the same size. I would have preferred an 80, you know, an 80, but you got to do what you got available. Anyway, so VLO, let's take a look. Here's our high, low, where was it, where is it? And it's bouncing off that bottom. I love it when it's bouncing off the bottom. Let's take a close look, but before we do that, let's check the numbers. Thank you for your dedication. Milton, not a problem. That's what I'm here for. Well, actually, yeah, we'll get to that another time. The numbers, 136.66. I'm going to look at the 137s. Not this week, but next week, 137s, 257. So 137 is just a little bit less than 2%. Julie C., how are you? Jacob, Vic, Ray, Raina, Siberian, HD, Hard Money, cool beans. All right, so a year ago, Valero was at 145. The bottom of the year was in November, and that was 120. Okay, well, our top was 180.85, and that was the beginning of April. Hi, Julie. GMAS, what's happening? On to 370. Cool beans. David Kleinesser. Interesting. Stock Joker. Sammy Sosa. Ooh. Okay. All right. So anyway, our high 185. That was back in the beginning of April. Last 30 days. Check this last 30 days out. That is awesome looking chart. Take a look. 30 days ago we're at 151. Down, up, down, up, down, up, down. Here's our bottom right here at 130. Okay? That was Wednesday. Thursday's up, Friday's up, Monday's up, Tuesday's up, Wednesday's up. We're sitting at 166, and we're looking at almost a 2% for next Fridays. So if I bought it at the opening price tomorrow morning, I sold the what do you call it? The closest strike price I can find. I'm looking at 1 or 2%. What size monitor is best for Think or Swim on a desk? 27, 24. It's going to be totally up to you. Okay, I use a 17-inch laptop. Okay, I just use this because I like the way it looks on the camera, and I can just point and make it easier for everyone. So for those of you who don't know, this screen right here is live on YouTube. So you can actually go to my YouTube channel, The 10-Minute Trader. Remember when I say, hey, this is James from Dividend Stock Talk, brought to you by The 10-Minute Trader. Okay, so the Trade Show Insider, cool beans. Bruce, what's happening? All right, so this is live on YouTube. Makes it easy. Simone, how are you tonight? All right, Dan, how you doing? Anna, Trucker Rosa, Trucker Ross, Pool Boy Cheeky, that right? Chacky? I have no idea. All right, Milton, you want to take a look at Zim? Zim, I can tell you right now before I even look at it, it's going to be a no. Okay. Okay, Zim is currently at 19.12, and the reason why Zim is a no, well, let's take a look. ZIM, here we go. And we want to take a look at historical data for Zim. Now, historical prices. I don't want to look at historical prices. Ooh, take a look at Marathon. Hold on. What stock is this? Zim. Dividends only. All the dividends. Okay, so here's why Zim, Milton, here's why Zim is a no for me. Okay, you may like it, perfectly fine, but it's no for me. That's a no. All right, the reason why, 2024, well, we have 2 dividends. Okay, and it goes all the way back to 2021. $2, $2.50, $17, $2.85, $4.75, $2.95, $6.40, 23 cents. So it goes from $6.40 a share all the way down to 23 cents a share. Explain to me why you think that is a good one. What stock was the last one? Not Zim. Valero. VLO. Valero Energy. Hellraiser. Raising hell. Hopefully he answers because I don't. I'd like to know. Oh. Yeah, well, Hellraiser. Mara, we're going to take a look at Mara in a little bit, Hellraiser. But it's nice to see you. I haven't seen you in a while. You showed up a whole bunch, and then you disappeared for a little bit, but now you're back. Nice. Okay. Hopefully you went on vacation, enjoyed yourself. All right, so Zim is going to be a no, just not enough dividends, and the dividends are all over the place. Okay, sorry. Okay, Hellraiser, Marathon. Now, I actually own some Marathon. So, let's take a look. M-A-R-A. First thing I want to see, as always, where's the high? Where's the low? Where was it a year ago? Where is it now? What direction? Look at this channeling to the side. I love that when it channels to the side because it allows me to buy, sell, buy, sell, buy, sell, buy, sell, buy, sell, buy, sell. I like that. Okay. What stock was the last one? All right, we already did that one. Darbenley, Bank of America. Hold on. Here we go. Buying cheap stocks is how you get rich. All right, John Dill. I like that. I like to think buying low, selling high, irrelevant of the price of the stock. It's the consistent movement and the predictability of the movements. And I always like the fact that, well, they consistently increase their dividends. That's what I'm looking for. Companies that are consistently profitable. Well, if they're consistently profitable, fine. I want to look at them. But I want to buy them at the right time. So timing is everything. I like buying at a low and selling at a high. So let's continue taking a look at Marathon. So Marathon, before we go any further, currently 1530 to 1578 to 1550. Look at this. This week, I can buy it tomorrow morning and still get 2% this week from Marathon. Okay, so if I buy it at the current price, I sell the 1550s, yeah, I can get close to 2%. Next week's 1550s are going for, what is that, 3%? 4%, I think. Yeah, holy shit. Take a look at that. Hellraiser, 4% for next week. That's 2% a week. Well, I like that idea. All right, so let's take a look at the chart. A year ago, we were at 10.15, okay? The bottom of the year was 7.16, okay? So from 7.16, check that out. It goes from $7 up to 34. That's like a 300 or 400% increase because right here at 7, 14's 100%. Okay, 21 is 200%. 21, 7, 28 is 300%. 34, that's a little over 300% increase. 300% increase from October to March. So what is that? 1, 2, 3, 4, 5 months. Over 300% increase in 5 months. Okay, but from there she drops all the way down to 14. Okay, which is more than a 50% drop. Shoots back up, drops back down again. So let's get a little bit closer. What's today's date? The 18th. So we're going to look at the 19th right there. Here we go. All right. Unfortunately, okay, Hellraiser. Unfortunately, look at the last 30 days. 1650 jumps up to 19, drops down to 13, shoots up to 1650. Now she's coming to the downside. All right. So Monday was lower, Tuesday, Wednesday. Yeah, we're going to a little bit on the downside. So I'm not quite sure if Marathon is something you want to jump into. But it looks like it'll be good in about 2 weeks. No, about yeah, 2 weeks. So I'm gonna put Marathon for 2 weeks. M-A-R-A. Whoops. Okay, so if she does keep coming down, it'll be great in 2 weeks. I have no idea who that is. All right, so let's keep on keeping on. Okay, Darbenley, you want to take a look at Bank of America? Oh, wait a second. Before we look at Bank of America, let's see where Marathon usually goes this time of year. Now, historical performance is not guaranteed. It's just that's what it has done in the past. Just because it keeps going down this time of year doesn't mean it's going to, or just because it goes up this year doesn't mean it's going to continue. All right, so here we are right here. Look at this right here. This is kind of all choppy, so I want to zoom into it and take a good look. So I'm going to go to the dot, which is today, bring out to about 2 weeks. All right, so here's where we are right here. So we're going to go sideways and to the upside for the next 2 weeks. Okay, so here we are now, the 18th. The 20th is here. This is Friday. Okay, and this is next Friday. So even though we're going to the upside for the next 2 weeks, then after that she'll dip a little bit. Okay, so I like Marathon. Okay, it works for me. So let's keep on going. John Dill, start your own banking system where you pay. I missed it. All right, John Dill. Start your own banking system where you pay more interest to do stock dividends. All right, John, send me a DM. We can chat. It sounds interesting. I'd like to hear what you got to say. Okay, GMAS, ADBE. We looked at that before. That's a no, but if you want me to look at it and tell you no, that works for me. Okay, ADBE. ADBE. Okay. Oh, first of all, it's $500 a share. No, thank you. Whoops. ADBE. Okay, so like I said, GMAS. We looked at ADBE a while ago, and it was a no then. So it's still a no, because there are no dividends whatsoever for this company. Okay, so if you're investing in this company, ADBE, and you're here on a channel that is titled Dividend Investing for Weekly Cash Flow, and you know that this company doesn't have dividends, why are you having me look at it? Okay, Hellraiser. No, my clock got cleaned when the tech sell-off happened. Okay, I feel bad for you, Hellraiser, but I do remember you were here for a while, all right, and you asked questions. And you asked some good questions, too. But I don't ever remember saying anything about buying tech stocks, okay? And then I can't help you out if you buy something that's going to go the wrong way. See, I don't take risks like that. You're still, I can tell by that picture, you're still young, okay? I'm 60, I'm retired. I can't take risks like that, okay? I stick to good quality dividend stocks, and I'm not looking for capital appreciation. I'm looking for cash flow, all right? Okay, that's a good one. Stocks do good when the moon is full. Are you breaking your rules because you bought Mara? Okay, Honey Badger. You do have a point there. Marathon doesn't have dividends. I get that. Okay, so what's the Mara strategy? So sometimes there are stocks that are being bought by people who I respect. Warren Buffett is one of them. There's a few others. So Marathon came to me a couple of months ago, and it just fit perfectly. And yeah, I know it doesn't have dividends, and it's usually a no. But every once in a while, I do bend the rules for certain stocks, and Marathon was one of them. Raising Hell Raising Hell, it follows Bitcoin. Yeah. Okay. No longer. Oh, the longer you ride the bull stock, the more money you will make. You have to anticipate the need. Okay. Fighters Club. Verizon, huh? So let's take a look at Verizon. Now, Verizon is on my list. I do like Verizon, but Verizon is going to be a no for this week. Okay, now, um, Fighters Club, the reason why Verizon is no for this week, well, look where the chart is right here. Monday was the high of the year. Okay, so what happens at the high of the year? Well, there's going to be profit taking. Now, look where the bottom is for the last 30 days, right down here at 41. So for me, I'm going to wait about 2 weeks for this thing to drop. Once it drops, it's going to turn around. Because you got to remember, people who buy and sell stocks, they're looking for profits. Well, look at the run. It goes from 41 up to 45. Now, 41 to 45 is a $4 move. A $4 move on a $40 stock, well, that's a 10% move. Okay? Now, so 1, 2, that's almost a week and a half. 10% in a week and a half. Okay, so here's your bottom, here's your top. That was a week and a half. Yep, now there's going to be profit taking. Now when the profit taking is done, it's going to stop, it's going to turn around and go back up. So I do like Verizon, but the numbers don't work this week. So I'm going to write Verizon, actually it's already written down for 2 weeks from today. JG, whatever. Okay, Keith. Keith, you want to look at QDTE? Keith Johnson, QDTE. Now, I could tell you now, QDTE. I could say no now, or I could say no now. I don't like QDTE. It's a monthly optionable stock. Now, remember when I say I want companies that have consistently increased their dividends for at least 20 years? That's 2 decades. Okay? And then I say I want to make sure the company has weekly options because that's how I'm going to get weekly cash flow. You cannot get weekly cash flow from a monthly optionable stock. Now, monthly optionable stock means you can only do it 12 times a year. Weekly optional stock, I can do it 52 times a year. Now, I didn't go to college, but I do know that 52 is better than 12. So, that QDTE is a no. Whatever, creator, bum, bum, bum. You need some tech analysis help. You need some tech analysis help. Could you elaborate, dude stuff? Because I'm not quite sure what you mean by that. Merit all-time high was 137. Okay. John Dill. Peaks are selling points. Pigs are profitable. The roller coaster loses. I'm not quite sure what you mean by that, John. On Hellraiser, raising hell so you can capitalize on the move after the dip. Yep. Uh-oh. Okay, Friday at the end of the month is time to buy. Fridays at the end of the month is time to buy. Okay, I'm a little bit lost, John. You need to be more more forthright with your little blurbs you're writing. Why 2 weeks? Patrick, why 2 weeks? I'm assuming you're saying, why do I buy it 2 weeks before the dividend date? Because that's the only thing I can assume. Okay. Now, I like to buy it 2 weeks before the EX date. I'm thinking that's what you're talking about, Patrick, because I'm not quite sure. I'm waiting for it at 12:17. Okay, Honey Badger, I'm not quite sure which one we're talking about. Does the Federal Reserve reports on interest rate affect Mara? Neo, I really don't pay attention to the Federal Reserve. Most of the companies I invest in are over 100 years old, and they're not really affected too much by the Federal Reserve. Remember rule number 1? Never buy something you don't understand or you don't want to hold on to, buy it as if you're going to hold on to it for a long period of time. So whatever the Federal Reserve has to say is really irrelevant. Either you like the company or you don't like the company. That's it. Okay, there's no wishy-washy here. Either you like Valero, you like AT&T, you like Ford, you like General Motors, you like General Electric, you like Colgate-Palmolive. Either you like the company or you don't. If you don't understand it, don't buy it. Okay, if you don't like Marathon, don't buy it. Fighters Club wants to take a look at Walgreens, WBA. WBA. Now, just to let you know, I do have some Walgreens. And I actually have Walgreens on like 3 or 4 different accounts. Well, because I like Walgreens. Ooh, Dragons Bay wants to take a look at Dunkin' Donuts. Is that DKDN or DNDK? I think DKDN. Okay, anyway. Walgreens, here we go. Here's our high, here's our low, here's where it was, here's where it is. It has our bottom right here. Now, from what I understand, that's a bottom of like a 7-year period. That has never been that low before. Okay, great. Well, let's take a look at the numbers. Currently, we're at $9. Okay, so this week's $9 is going for 14 cents. That's over 1%. Next week's 9 is going for 31, which is over 3%. Well, I like 3%. But here's the thing. Do you like Walgreens at $9 a share? Now, I'm kind of curious. What is Walgreens book value? WBA. Because I'm kind of curious. All right, statistics. There it is. Book value. Check that out. The book value for Walgreens is $15.80 a share. Well, you're buying it at 9, and the book value is 15, almost 16 bucks. How can you possibly go wrong there? All right. Honey Badger, I know that the problem is these are lower lows. Yep, I get that. Okay, Honey Badger wants to take a look at Colgate-Palmolive as soon as we finish up with Walgreens. Okay, so a year ago, Walgreens at 22. We topped out at 27. Okay, here's our bottom. Right there on the 5th. And that was $8.46. See, 30 days ago was our high, a little over 11. Okay, then we dropped down to $8.46. That is the bottom of the 30-day period. She went up, pulled back. She went up, now she's coming down. Okay, fine. I have no problem with that whatsoever. I like Walgreens. I'm going to hold on to it. No intention whatsoever selling it. Okay, because it's been giving me a nice rate of return every single week. All right. So Honey Badger wants to take a look at Colgate-Palmolive. I hate that crap. All right. Colgate-Palmolive. Here's our high, here's our low, here's where it was, here's where it is. I'm going to say no to Colgate-Palmolive for this week only because look at where it is. You're at the high of the year at 110. Look at the run-up from October of last year, from 70 bucks. Look at that. Look at all that space. Yeah, that thing's going to come down, and it's going to come down hard, in my humble opinion. I have been wrong once or twice. Fine. I got no problem with that. But look where she is. Okay, not quite down far enough, and she's still dropping. So I want to keep an eye on Colgate-Palmolive because I like Colgate-Palmolive. I do. Right now it's at 103. Well, the 104s are going for 25 cents. Yeah, not even worth it. Next week's 104, 75 cents. Not even worth it. The numbers just don't work with Colgate-Palmolive at this time. So maybe in a couple of weeks when she comes down a little lower, maybe the premiums will come up. But at this moment, it's not worth it. Dragons Bay. No, wait a minute. It's DK. I know it's DK. DK, D, and no. DNKN, okay. DNKN, all right. All right, Dunkin' Donuts doesn't have any options. Sorry, Dragon. Honey Badger can't find the real bottom, then it pops up if you hesitate, support, upward. Okay. Friday's Club, we already looked at WBA. Hellraiser, 30 grand, I have no idea what you mean by that. What about PNNT? Well, I know right now gain is a no. PNNT, never heard of it. And it's probably why. Okay, monthly optional stock, no, doesn't work. The numbers just don't work. Not you, they were my long-term holding. Oh. Hellraiser, I'm sorry. Okay. Rick, QDTE, we already looked at it about 15 minutes ago. It was a no 15 minutes ago, so it's still going to be a no. Drake, yeah, gain is going to be a no also. GAIN. Okay, monthly options just don't work. QDTE, monthly options just don't work. VOO, D money, yeah, no. VOO does not work for this trading strategy. Two reasons. Number one, it's $500 stock. Number two, it's at the high of the year. I never buy at the high of the year. But here's the thing, D money, why I don't like VOO. And you probably shouldn't like it either. Why am I saying that? Well, let's take a look. VOO. All right, so here's a summary for VOO. Are you seeing the numbers? Now, my question to you, D Money, what the hell are you thinking when you're putting your money into VOO? VOO is paying 1.28% for the year. 1.28% for the year. I have no words. Corn what? What the heck does that mean? Corn what? Anyway, but D-Money, did you actually take a look at these numbers? Look, the yield, 1.28%. That means you're getting $1.28 for every 100 you put in. Do you have any idea how long it's going to take you to double your money at 1% a year? That's not that's even below the inflation. Inflation is what? 6, 8, 9, somewhere in that area, some ridiculous amount. I have $53,000 sitting in my savings. Well, that's absolutely horrible. Why would you do that? Look at it this way. You got $53,000 sitting in your account. Inflation's over 10%. So every year you're losing $5,000 just due to inflation. Okay, actually, if you take a look, since they started the money printer, you've lost about 40%. Should I get a CD? Oh, hell no. You should do some research. Find out, yeah, 5.25, I see that. You should do some research and find out where the best place for you to invest your money. Okay, right now, inflation is more than 5%. Okay, don't listen to the bullshit they tell you. I went to Walmart, 2 or 3 years ago. A soda in the soda machine was 50 cents. Well, now it's 75. I understand it's a quarter. That's not the issue. The issue is the 50% increase. Did my income increase 50%? Hell no. Okay? I could buy a dozen eggs for $1.87 5 years ago. Well, now it's $3. That's 100% increase. The $53,000 is emergency purposes, covers health care and household repairs. That's a lot of freaking money for household repairs and emergency services. But that's just my opinion. What do I know? All my money's invested at all times. I have a credit card and a debit card attached to my trading account. So if I need anything, an emergency, well, I'll use a credit card or a debit card. So D money, does that make sense to you? I mean, think about it. You're investing your money and you're getting 1.28% per year. Okay, Fighters Club, we already took a look at Walgreens. Thoughts on Clean Park and Riot? Well, Clean Spark, I've never heard of it. Okay, that's a no. Riot, I actually have some Riot. Not that Riot was on my list. Riot was suggested to me by one of my shareholders. So, that being said, let's take a look at Riot. R-I-O-T. Okay, so Riot, the high's here, 19, the bottom's here, 650. A year ago, we're at 11, and we're currently at 7. Okay, fine. Here's your bottom. You're going to make money buying low, selling high. Well, that's the low of the year. You can't get lower than the low of the year. All right, so let's take a look at the numbers. 734, the 750 is going for 6, not quite 1% for this week, but next week, the 750s are going for 24 cents. That is a 3%. That's why I'm buying it, because it's 3%. Okay, we opened up a year ago, 11.27. We topped out at 18.89. Nice channel. Okay, last 30 days, check that out. Here's the high at 8.02. 8.02 right there. A week later, here's the bottom. What was the bottom? 6.36. Look at the movement. 2 weeks. Okay, all of last week and this week, all moving up nicely. Okay. Is it going to continue moving up? Don't know, but I already have it. After you buy, why keep holding and not sell? Creator, that's a good question. I don't hold. Okay? So when I buy the stock, here we go. $7.17. Well, I can buy it tomorrow morning at 7:30. Okay? 7:33, 7:34. That is the bid and the ask. If you'll notice, the bid and the ask are both higher than the last traded price. Now, as a clue or a cue, the market maker is trying to push it up tomorrow. So when the bid and the ask are both higher than the last traded price, the market maker is going to push it up. All right, so if it's at 7:30 and I can buy it, and I can buy it at 7:30, so the 750s get 24 cents a share, well, that's over 3%. 3% is very nice for me for a week. Because think about it, 3% a week in this 52 weeks in a year, well, that's 150% at 3% a week. That works for me, but that's not my goal. My goal is 1% a week, because 1% is easier. All right, that being said, why holding rather than sell it? I'm not quite sure what you mean, because I do a covered call. I do a covered call Mondays and Tuesdays. Basically, what does that mean? I buy it for this price. I sell a covered call for that price. If it goes over this price, well, I'm back into cash again. I want to be back into cash on Monday. Okay, so let's take a look at the calendar. All right. Whoops. All right, here we go. All these little green dots represent an EX date. Now let me explain what an EX date is. There's 4 dates to remember when you're talking about dividend stocks. Date number 1 is the announcement date. Hey, hi, hello, this is me, so-and-so, such and such, blah, blah, blah. We have a dividend, and this is when we're going to pay it. The announcement date. That's the date number 1. Date number 2 is the EX date, or the EX dividend date. The last day the stock trades before the dividend is paid. That's what these little green dots are. Okay, these are the companies that I like. This is my personal list right here. Now, if you don't like my personal list, we can go here, do this, do that. Okay. Now, those are all the companies that have dividends. Now, you think there's nothing here? No, no, no. There's just not enough space. There's 61 companies here. Okay? 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 times 4 is 36. So there's 36 here, probably another 30-something here, 51 here, 106 on the 13th. Look at them all. There's literally hundreds. And this is just 1 month. Okay, there's 3 months in a quarter. So each company pays every quarter, every 90 days. So every 90 days, I'm looking at the same companies over and over and over again. But this quarter, this month, these are all the companies that are paying a dividend. So if I want to get the dividend, I got to buy it before the little green dot. Okay, so that's date number 2. Date number 3 is the date of record. Whoever owns the stock on the date of record is entitled to the dividend. And date number 4, well, that's the payment date. That's when you actually get your money. Okay, so that's why I don't hold. Okay, if I buy it on a Monday, I sell a covered call. So let's say, hypothetically speaking, let's find one. Let's find one that we can agree on. And we will take a look at Warren Buffett's list. Here we go. Bristol Myers Squibb. Okay, BMY, Bristol Myers Squibb. Right here, 60-cent dividend on the 4th of October. Okay, let's say hypothetically I like Bristol Myers Squibb and I want to buy it and I want to collect that dividend. Well, I like to buy 2 weeks before the EX date. Here's the EX date here. 2 weeks, 1 week, 2 weeks on a Monday, the 16th, which was what, 2 days ago? Anyway, so buy it on a Monday at the opening price, and then I sell it to someone else the very same day. So if the market opens at 9:30, at 9:30 I want to buy the shares. And at 9:30 in 15 seconds, I want to sell the covered call against it. So just for the fun of it, let's see what Bristol Myers Squibb opened up at on the 16th. BMY. The 16th. Here we go, right here. Whoops. Okay. Now, on the 16th, which is this date here, right? The 16th, okay? The opening price was $49.50. Okay, great. So the $49.50 option right here. So if I buy it on Monday, the 16th, I sell somebody the rights to buy it from me at $49.50. What did it open at? Well, it opened up. It opened up at $49.50. Oh, that's freaking awesome. It opened up at $49.50. I sell it for $49.50. What do I collect? I collect this right there. That is the premium. So if I'm buying it at $49.50 and I'm selling it at $49.50, where's my risk? Well, my risk is if it goes below $49.50. Well, currently right now it's at $49.74. And it's in an uptrend. Okay, and it has its dividend in 2 weeks. We get the dividend in 2 weeks. It's in an uptrend. The chart is telling me it's the right time. The option chain is telling me I'm getting over 1%. Well, everything is pointing to, yeah, buy me, buy me, buy me. That type scenario. Okay, great. So I'm not holding it. Okay, I want to sell it. And I'm selling it for the exact same price I paid for it. And I'm only buying it if the options tell me it's a 1% deal. That's number one. Is it a 1% deal? Am I making my 1% for this week? That's one. Two, what is the chart telling me? And that's a big one. What is the chart telling me? Well, the chart's telling me here's the high, here's the low. Okay, it's going to the upside. Great. Well, that's what the chart is telling me. Then it always comes down to the very, 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 very last question, and it's a big one. Do I like Bristol Myers Squibb at this current price? Because remember, rule number one, never buy something you do not want to hold on to for the long term. Okay, long term is however long you decide you want to hold on to it. The longest I've ever held anything was 9 months. Mohammed Syria. Okay, I have no idea who you are. If you really want to co-host with me, you got to DM me with your phone number first so you and I can have a chat. Because there's certain topics I do not tolerate and I do not want to talk about. Okay? All right. So, creator, hopefully that answers your question. I don't hold anything because I want to. I hold it because it went the wrong way. And that's exactly what's going to happen to you. You're going to buy something and it's going to shoot up. And then next, you're going to buy something and then it's going to drop to the floor. Well, that's what they do. They go up, they go down. That's all they do. Okay, so it always comes back to rule number one. Never buy something you don't understand and you don't want to hold on to for the long term. If you don't want to hold on to it for the long term, don't buy it. Hey James, how's it going? At the Cross Scripture, how are you today? I'm doing wonderful. I had a nice day today. I'm building a swing for my mother. Dude, get some backlight LEDs for that TV. Yeah. Brianna, what's your take on the doji that looks like a literal spinning top with a long wick and a short wick time for the ratio of 4:1? I have no idea which doji you're talking about, but a doji is when it opens at one price and it closes at the exact same price. It has a high and a low, but it still opens and closes at the exact same price. That's called a doji. All right, creator, hopefully that was it. Hopefully that answered your question. I'm fine, just got home. What do you think about investing in the Cleveland Clinic? No, because I've never heard of the Cleveland Clinic. And does the Cleveland Clinic have 20 years of increased dividends? Oh, wow, I missed all these questions. Sorry, guys, I had to go back and see these questions. Darbenly, Bank of America. Let's take a look at that one. BAC, Bank of America. All righty. So, Bank of America, very first thing I want to see. Here's the high, here's the low, where it was, where it is, what direction it's going. Cool, 39.62. All right, so 39.75. The 40s for this week, nope. 40s for next week, yes. Okay, so I like the 40s. I wish I could show you what I meant. Good day ahead anyway. You know what? Cleveland Clinic, it sounds interesting, but it doesn't have 20 years of increased dividends. Okay? So it's going to be a no. I've never heard of it. If I've heard of it and it's still a no, well, then there's a reason why it's a no. But I've never heard of it. Okay? I don't invest my money into anything I don't know. But that's me. Okay? There might be other people that will invest into Cleveland Clinic, but it ain't me. Okay. Did the Cleveland Clinic is the best? I really honestly don't care. I honestly really, I honestly, and I don't know how to express this. I honestly don't care if it's the best clinic in the whole wide world. Look at the stocks and see what it looks like. Yeah, but if it doesn't have 20 years of increased dividends, it's going to be a no. And I don't see hospitals or clinics as a profitable source. Okay? It just doesn't sound, all right, it's going to be a no. Sorry. All right, let's get back to Bank of America. All right? Now, Bank of America has been around for over 100 years. Okay? I know who they are. I know what they do. I even know how much life insurance they actually have. They have millions upon millions. It's just freaking ridiculous. Okay, you got that one? Okay. So, anyway. A year ago, wait a second, before we even do that, let's take a look at the numbers. 39.62, we'll be looking at the 40s, okay, over 1%. Good, I like over 1%, that works for me. A year ago, 28.50, bottomed out the end of October at 24.87. Okay, so here's the top right here. We're gonna triple top at 44.44. Okay, so look at that, from 44.44, the high, look at all that profit taking. It drops all the way down to 35. That's a $9 drop. That's a 20% drop. Okay, she drops 20%. Okay, so from 35, she goes to 41. That's a $6 increase on a $35 stock. $6, that's 10, 15, 18%. So it drops 20, jumps 18, comes back here, and now she's bouncing up. And she's got a doji. Look at that. All right, anyway. So I want to zoom in and see this area right there because I'm interested in the last 30 days because I want to know where do I think it's going next. Okay, so tomorrow or Monday. See, I buy all my stocks on Monday. Tomorrow's Thursday. I don't buy anything on Thursday. I never buy anything on Friday because all my money's invested on Monday and Tuesday because that's the most amount of time value I'm going to have. Because if I'm doing weekly options and the options expire on a Friday, and I'm going from Monday to Friday, Monday to Friday, Monday to Friday, well, Mondays, I got 5 days of time value. Monday, Tuesday, Wednesday, Thursday, Friday. Okay, we're into Wednesday. We have 2 days of time value left. That's not going to get any halfway decent premiums then. All right, so here's the bottom. She's shooting up. We're at 39.62. The 40s are going for over 1%. I like Bank of America. I do. All right, so let's keep on moving along. Monty. All right, interesting, Monty. I'm not going to repeat it because I don't do cryptocurrency. Okay, so I'm not going to even say it. Yeah, I get that, Monty. Tom Barry, glad to see you. It's not easy to risk. Glad to see you're still educating. Okay, Tom. Creator, I am learning if you buy a monthly dividend 1 week before the EX date, isn't the results the same? Absolutely not. Okay? Now, just for the fun of it, Creator, let's throw in O Realty as a monthly. All right, so we got 2 days left. It's currently at 62.39. The 62.50 is going for 25 cents. That's not even 0.5%. That's going to be a no. So do you buy and write options? Yep, absolutely I do. Okay, so Creator, it's got 2 days left. It doesn't work. Okay, not even 0.5%. Okay, but what is the next one? Okay, the next one, 62 to 63, 62.50 is going for 95 cents. Well, that's 1.5%. You might be thinking, oh, 1.5% is great. It is if it was a weekly, but this is a monthly. So that means 30 days, which means 4.5 weeks because it's 7 days in a week. Okay, so 4.5 weeks, that's 5 weeks. I got to hold this to make 1.5%. 1.5% on a monthly is on, what is it, 18% for the year. If you like 18% for the year, and there's nothing wrong with 18% for the year. But there's another reason why I don't like monthlies. Do you see where the stock is now? 62.19. Here's your top here. Well, she's going to come down. But here's the thing. Joshua, how you doing? Here's the thing. This option here has got 30 days. 30 days. That's 6 weeks. 6 weeks. Okay? When I look at the last 30 days, okay, look what happened in the last 30 days. It went from 60, shot up to 63, pulled back to 62. Well, where do you think it's going to go in another 30 days? How the hell am I supposed to know? 30 days, a lot can happen. That's why I don't like monthly options, because it's way too much time from one to the other. That's one. That's one reason. The other reason is the premiums are horrible. 1.5% for 5 weeks? Yeah, no thank you. Okay? I don't like monthlies. I don't know how many times I gotta say. I gotta say it at least 3 or 4 times every single night. I don't like monthlies. The numbers just don't work. How many positions do you have every week? All right, Apple user 659527323. That's that weird ass name. I get 6 accounts. I get one account that has 4 positions. I have another account that has 6 positions. I got another account that has 7 positions, and I have one account that has over 20 positions. Okay, so the 3 accounts that I share with you guys publicly, because I do, I show you all my trades. As a matter of fact, let's go take a look at some of them. Okay, here are my trades right here. I share them with you guys, all right? 2.85, 0.72, 4.05. That was week number 31, which was the 29th of July. That was the week of the 29th of July. So Wynn, Kohl's, Walgreens, MPW, Bitto, Win, Bitto, Coles. All right. So I share all these trades with you from the 3 different accounts. Now there's 3 other accounts I don't share with you guys. Okay? All right, let's go back to where we were. All right. How do you control your emotions? Discipline. Easy. It's money. Money comes, money goes. You know what doesn't come and go? Time. I buy stocks and I sell options, and I do it in 5 or 10 minutes a day. That's it. 5 or 10 minutes, that's all it takes me for my own personal accounts. Now, for other people's, it takes a little bit longer because there's a little bit more to it. But for your own trading strategy, when I say, hey, this is Jane from Dividend Stock Talk, brought to you by the 10-minute trade, it should only take you 10 minutes because it's really not that difficult. Let's look at a few, and I'll show you exactly how it should be. Okay? Market watch, here we go. Let's go to here, this week right here. Take a look at this. There's 4 right here. Occidental Petroleum, Hewlett Packard, Boyd Gaming, and Coca-Cola. Well, let's take a look at those 4. Set your timer just for the fun of it. See how long it takes me to take a look at these 4 stocks. If I don't explain and stop and you know, show you guys. First one, Occidental Petroleum. OXY. Okay, high low is bouncing off that bottom, 51.75, 52s. No, not this week, 52s next week, 73. Cool beans. I like that one. Okay, I like that. See the bottom here, bouncing up. Cool. So go here, covered stock. I like the 52s right there. 52, there we go. 1,000 shares, there we go. Bust up my calculator. 860 is my profit, 860. It's costing me 51,000 divided by 51,146. Gives me a grand total of 1.68%. Oh, hell yeah, I like that one. Get out of there. Get out of there. Back to here. Hewlett Packard. HPQ. Okay, high, low, is, current direction, blah, blah, blah. Ooh, like that, bouncing off that bottom, last 30 days. Okay, up, down, up, down, up. Awesome. It's at 34.53. Okay, let's get rid of this. 34.50. Okay, 35s are going for 15 for this week, 38 for next week. That works for me. Okay, let's change this. Covered stock. The 35s for next week. There we are right there. Okay, 1,000 shares. 870. 870 divided by 34,000. That's what it's costing me. 136. That gives me a grand total of 2.5%. Double, hell yeah. Like that one. So that's 2 so far. Okay, next one, Boyd Gaming, BYD. BYD. Okay, that's going to be a no. That is a Warren Buffett stock, so no. Globe Life. I think Globe Life is also a monthly. GL. No, it's not. Cool beans. All right, high, low, is, current direction. Last 30 days. All right, that's going to be a no. It's at the high of the year. All right, so I just breezed through those four stocks. I found 2 out of 4. All right. Now, how long did it take me? It took me less than 3 or 4 minutes because I knew what I was looking for. Number 1, anything on my chart, on my calendar, is a definite yes for me because I've already looked at who the company is. I've already looked at the fundamentals. I already looked at everything I need to look at in order to find out whether or not it's a good company. So if it shows up on my calendar, it's a yes. But what's not a yes? Well, it's not a yes if the numbers don't work. Okay, what am I buying it for? What am I selling? Am I getting my 1%? Well, you saw 2 of them didn't work. 2 of them did. Okay, one was 1.5% or 1.6, and the other one was over 2%. So great, that works for me. And that's how quick it should be. Now, when you find your stocks, and when I say find your stocks, you got to find out what you like. Once you find out what you like, fine, put it into your calendar. When you put it in your calendar, you'll see it pop up 4 times a year, every 90 days. As a matter of fact, let's take a look. Okay, here is September 2024. Let's get out of here for a second. Okay, so September is the 3rd month of the quarter, because each quarter has 3 months: January, February, March, first quarter; April, May, June, second quarter; July, August, September, third quarter; October, November, December, fourth quarter. So these companies, Bank of America, General Motors, Boyd Gaming, Coca-Cola, Hewlett-Packard, Occidental Petroleum, Paramount, Mondelez, U.S. Bank, Bristol-Myers Squibb, and Globe Life. 3rd month of the quarter. Okay, so 3rd month of the quarter would be March, right? Okay, March 24. You ready? Okay, March 24. See it? Wait for it to load. Come on. All right, here we go. Oh, Bank of America, General Motors, T-Mobile, KHC, Occidental Petroleum, Hewlett-Packard, Boyd Gaming, Coca-Cola, Paramount, Mondelez, U.S. Bank, and Globe Life, Bristol-Myers Squibb, and American Express. Okay, so a couple of them that weren't there before. Okay, fine. Well, let's keep on going. March, April, May, June. Okay, April, May, June. June, here we go. June, 3rd month, 2nd quarter. Give it a second to upload. Okay, here we go. T-Mobile, KHC, Bank of America, General Motors, Boyd Gaming, Coca-Cola, Hewlett-Packard, Occidental Petroleum, Paramount, Mondelez, U.S. Bank, American Express, Bristol-Myers Squibb, Globe Life. Same companies, every 90 days. Let's go back to, where are we? We're in September. All right, wait, September. Here we go, September. All right, so every 90 days, once you find out what companies you like, and what companies do I like? I like the Dividend Kings. 54 companies that have increased their dividends for more than 5 decades. That's 50 years. Second list, Dividend Aristocrats. 67 companies that have increased their dividends for 25 consecutive years. Then you have the Dividend Champions, 150 companies that have increased their dividends for 25 years, but the rules are a little bit different than the Aristocrats. The Aristocrats have a little bit more stricter rules than the Champions, but still 25 years of increased dividends. And then you have the Dividend Contenders, 300 companies that have increased their dividends from 10 years to 24 years. Not quite to the Dividend Aristocrats list or the Dividend Champions list, but far, far away from the Dividend Kings list. Okay, then I like to throw in Warren Buffett's list. Between those 5 lists should give you 300 companies. Once you find out what your companies are that you like, put them into your watch list. Okay? Here's my watch list. Okay? A, Apple, AbbVie, ABR, all, look at them all. There's over 300 of them in that list, because that's the Dividend Contenders. Let's change to Warren Buffett's list. Ooh, Warren Buffett's list. Check that out. Apple, AbbVie, Ali, Amazon, Aon, ATVI, American Express, Bank of America, Bank Mellon, Bristol-Myers Squibb, Capital One Finance, Chevron, Globe Life, General Motors, Hewlett-Packard, Jeffries, Johnson & Johnson, Coca-Cola, Kroger, KHC, which is Kraft Heinz. That's Warren Buffett's list. Okay, find a list of the companies that you like. Then do the research on those companies to make sure whenever they pop up in the calendar, it's okay, yeah, great. Is it the right time? Is the numbers working for me? That's huge. So when I look at Hewlett-Packard, I never, ever, ever have to go and take a look at, well, what are the fundamentals? What's the earnings? What's the profit? I don't have to do that. I've already done that. Could you look at CPA? Let me know if you think the dividend yield is 7%. CPA, CPA sounds familiar. CPA. Kappa Holdings. Yeah, that's a no. Sorry, dude. Okay, that's a monthly optional stock. I don't do monthlies. That's nothing more than a waste of my time. Now, I have 300 companies I look at consistently that have increased their dividends for more than 20 consecutive years. Why would I look at a company that doesn't fit? Got it? It doesn't fit. It's like a square peg in a round hole. It just doesn't work. Thank you very much and for the brief summary. That was helpful. All right. Now, there's over 300 companies that do have weekly options. This one only has monthly options. Okay, so if you're going to get weekly cash flow from this, you're going to have to sit in front of your computer and look for when the chart tells you, or it's a double shoulder, or it's a pennant, or a triple bottom, whatever. There's so many different patterns to look for, and I can't be bothered. But that's me. Okay, you have to decide what is right for you. And you all have to do that. You have got to decide what's right for you. Don't listen to a damn word I say. I'm just some random guy on YouTube. Okay, what the hell do I know? I have no college degrees in anything. Tom Barry, all right, Crater, I'm learning, blah, blah, blah. Okay, how many positions you have? I already answered that questions. Tom Pal, how you doing? VFC Felix, how are you? VFC over 2% for next. Ooh, I like 2%. Let's check it out. VFC Corporation. Oh, Felix, I'm going to say no. The only reason I'm saying no, Felix, is take a look. Today is the high of the year. Some random guy, but seems you okay. Thanks for that. I'm going to take that as a compliment. So, Felix, I like VFC. I really, really do. What main fundamentals do you look at? Well, how consistently are they profitable? That's number one. How consistently are they profitable? Do they have options against them? The book value, that's a biggie. Because don't get me wrong, okay, a lot of people like NVIDIA. I don't. NVIDIA is 120. Let's pull it up. NVDA. We're going to go back to that one in a second, Felix. Hold on a second. NVIDIA, take a look at it. Okay? A year ago, at 40 bucks. Well, jumped up to 140. From 40 to 140, that's over 300% increase. Great. Lovely. However, the book value for NVIDIA is $2 a share. So you're paying $113 for a $2 stock. That's like, hey, I have a bottle of water. It costs $1. I'm going to sell it to you for $195 or whatever. Okay, it doesn't make sense. The book value is $2. But guess what the dividend is? The dividend is 1 penny. Ask yourself a question. Why would you invest in a company $113 a share to collect 4 cents a year? It's 1 penny per quarter. Every 90 days they pay 1 penny. Hell no. Okay, so certain things are important. Book value is one of them. Okay, cash flow is another. Consistency on increased profits. That's another. Okay, how much debt are they carrying? What is their cash flow? Stuff like that. But once you do your research and you take your stock and you throw it into your calendar, well, it's going to come up every 90 days. And when it does, it's never a question of, oh, is this a good company or not? Okay, no, that's never a question. What is the current stock price? What is the current option price? Is it 1% or more? And what is the chart telling me? Okay, I don't like buying at the high because you're standing on a ladder waiting for someone to bring you a taller ladder. That doesn't work for me. Okay, I like buying at a low and selling high. Buying high, waiting for it to go higher doesn't work. I like NVIDIA because it's a great swing trade. Been working for me. Yep, I get it. NVIDIA's great for swing trading. It has lots of movement, but it's not something I would buy and hold on to a long term. And I don't do that kind of trading anymore. Okay, my assumption is you're a little bit younger than me. Okay, so you do have the ability to go back to work and continue working if you lose money. Okay, not me. I'm retired. I have no desire to go back to work and punch a time clock. Okay, correct. Everybody's different, and that's the beauty of it. Okay, so if you like trading, your time for money, great, more power to you. Okay, I like investing. I take my little chunk of money, however much money you think I have, I don't. I have enough that keeps me out of the poorhouse. Okay? Now, I can't buy a Lamborghini, don't want one. I can't buy a private jet, don't want one. Okay? Certain things I have in my life, and I consider myself fortunate. But I have enough to settle my bills on a monthly basis. I'm in his vent. I escaped. I have no idea what that means. Okay, who valued it at 1580? Well, they have what's called certified public accountants. Okay, so they have what's called a hold on a second. There's a certain assets and liability. Assets, liabilities. What's your size? I contract at a time. Use the ratio. ETAV. I have no idea what that means. V. So they have what is called assets and liabilities, or what do they call that? There's a name for that. Profit and loss statements. I don't know. Well, but once you go over the assets and liabilities, what do we own? What do we owe? And what's the difference? Okay, so the book value. Okay, the book value on almost any stock is easy to find. Okay. VOO. What's the book value for VOO? Where is it? Where is it? Where is it? Summary. No. Historical community. What? There is no statistics for VOO? That's weird. Okay, so VOO, it doesn't have any statistics. Okay, fine. All right. Okay, VFC. I mean, how many contracts do you write at a time? Is it typically one? No, dude. I got 73 contracts on one stock. 73. Okay. I think the most I've ever done was like 150. I think it's the most I've ever done, 150 contracts. But for the most part, it's 10. It's usually about 10. All right, Felix, let's go back to VFC. Now, there's a reason why I said no to VFC. Okay, Felix, look where it is. It's at the high of the year. Not the high of the year, but it's the high of the 30-day period. I don't like buying it at the high. Sorry, even though it has a nice premium. Okay, right now 1911, the 1945s, the 1950s are going for 38. That's only 2%. Yeah, that is 2%. Great, but from 11 to 20, that's almost 100% increase. Almost. Okay, so there's going to be profit taken more or less. I do not want to buy it at the high. I'm sorry. Sorry. What's your favorite energy stock? I don't have one. Alcoa. Ooh. Alcoa. All right, Alcoa looks like it's going to be a no. Sorry, JT. But the reason why it's going to be a no, okay, look at the last 30 days, JT. 30 days ago, we're at 33. She drops down to 28, shoots on up to 36. Okay, it's a little bit too high for me. However, I do like Alcoa. I do. So I'm going to write Alcoa down for the next 2 weeks. So I'm going to look at it again in 2 weeks. Alcoa, 2 weeks phase. Sorry about that. Rich Bruner, Hawaiian Electric, no. Ever since the fires, they stopped paying dividends, no. Don't listen to any of this unqualified hack says. Well, you're absolutely right. Don't listen to a damn word I say. What the hell do I know? I have 5 contracts, $3 strike, January call, option advice. Okay, Joseph, I have no idea what we're talking about. None whatsoever. Okay, what stock are we talking about? What's the current strike price? What is the underlying? I have no idea what we're talking about. On Archer, oh, so you have 5 contracts, a 3 strike on Archer. What the heck is Archer? Archer Daniel, ADM. Oh, ADM, that's a good company. Hudson Edsel, I'm a financial advisor. Well, double righty then. Good for you. All right, so ADM, Archer Daniels. Here's our high. Here's our low. Look at that big gap down. Cool beans. And look, we're channeling for the last couple of months. Awesome. We're currently at 60.53. Ooh, 61. The 61s are going for nope, and the 61s, yep. So the 61s next week, not quite there. I'm sorry, dude. The numbers just don't look right. Okay? The current price, 61.59. The closest strike price is going to be the 62. And the 62 is only going for 30 cents. That's a 0.5%. Now, if you like a 0.5% a week, great, fine. That's, what is that, 26% a year? Okay. I only listen to CFA and CPA. What the heck is CFA? Oh, a certified financial planner or a certified financial advisor. Well, good for you, dude. Awesome. One less person for me to worry about. Hellraiser. No, it's not. Okay, I have no idea what we're talking about, Hellraiser. CLRO. How about it? I never heard of it. CLRO. Clear one. Yeah. No. That's corporate greed. Hellraiser. I have no idea what we're talking about. Okay, Joseph, you already talked about that one. Hellraiser. Purely corporate greed has nothing to do with inflation. You're absolutely correct. It doesn't. CLRO. We already looked at that one. It's a no. Critical thinker. How about losing money? Well, that's an interesting question. For the fun of it, let's take a quick gander. Okay? Now, I told you guys I share all this information, and I don't hide anything. Profit and loss year to date. Here we go. You ready? Profit and loss year to date. AEO. Lost money. Win. I still own it. Haven't lost yet. Ablemal. I still own it. Haven't lost yet. Bitto. I lost money on Bitto. $600. That's it. I lost on 2 positions in this account. That's it. Only lost twice. Look at all the other wins I had. Okay? That's this one. Account number 2. Where is it? Profit and loss year to date. Here we go. 1, 2, 3, 4. Well, I still own 1, 2, 3, 4. 0 losses in that account. 0. Okay, next one. This one here. Now, I only share 3 accounts with you guys, so that's all I'm sharing. Profit and loss year to date. That's not right. I have a lot more positions than that one. Oh, there it is. Those are all my trades. Don't pay attention to those. Here we go. Profit and loss year to date. All right, you ready? Account number 3. Profit and loss year to date. 1, 2, 3, 4, 5. Okay? 5 losses. 1, 2, 3, 4, 5. I still own all 5 of them. I haven't taken any losses in this account. Haven't taken any losses in my second account. And I only have 3 losses in my first account. So, I've been trading since January 2nd. Okay, January 2nd. Okay, here's all the trades that I have done so far this year. All right. Week 1. Okay. 1, 2, 3, 4. Wait, 1, 2, 3, 4. Okay. And 1 account. 1, 2, 3, 4, 5 in that account. Okay, that was week 1. 1, 2, 3, 4, 5, 6. 1, 2, 3, 4. You can count them all. Okay, so I have 1 account, I've lost nothing. Second account, lost nothing. Third account, I've lost 3. That's it. 3 losing accounts since the beginning of the year. It's not the 3 losing accounts, sorry. 3 losing positions since the beginning of the year. All right, let's get back to where we were. Okay, CLRO is a no. How about losing money? Haven't lost any money yet. Well, not anything huge. Plus the growth. Yeah. What do you think about RBLX? Omar, how are you today? RBLX. RBLX. Okay. RBLX. Never heard of it before. Let's check and see how many dividends they've actually paid out. RBLX. Okay, historical data, oh, sorry, dude. Who said that one? Omar. Omar, there are no dividends in the selected time frame. RBLX is a no. Disney, okay. Disney. DIS. Okay, here's Disney. Here's the high, here's the low, here's where it was, here's where it is. It's going to the upside, and it's going to be a no for this week. Now, the only reason why it's going to be a no for this week, Omar, because once we zoom in and take a look at the last 30 days right here, here's the last 30 days. 30 days ago, we were at 90. We jumped up to 92, dropped all the way down to 84, and then we shot up to 93. This is where we are now. I don't buy at the high. So Disney would be a candidate for 2 weeks from today. So 2 weeks, we'll take a look at Disney again, but not this week. Okay, Bingham, CLRO is a no. Joseph, I have 5 contracts, 3, you already talked about that. How much was that computer? About $200. Hello, James, how about Ford? We already looked at that one. Do I buy options? No, I do not. I only sell options. How do I get the EX stakes on my calendar like yours? Okay. To get the EX dates, you actually have to create a watch list. So, up over here, see where it says watch list? You come to the very next tab over, and you open that up. The very next tab, okay, you got this big window that opens up. You come all the way down here where it says create watch list. So you create a watch list, click on that, and you can name it whatever you want. John's Pizza Party Stocks. There you go, John's Pizza Party Stocks. Once you import them, okay, you can add a symbol one at a time, or you can cut and paste off a CSV file, comma separated value, blah, 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 whatever. Or you can import them off your clipboard. However you want to import them, you can. Once you do that, you hit the save button. Okay? Now it's in your watch list. So let's get out of there. Now, once you get it in your watch list, you come on over to the calendar. Okay, right here in the calendar, you see that little sunshine right there? Right next to the stock symbol, the sunshine? You click on that. Okay? And this will open up whole bunch of another window, and then personal, that's your personal lists. Okay, you click on that. Now here's your personal list. Here's all my lists right here. Dividend Kings, Dividend Contenders, Dividend Champions, Dividend Aristocrats, calendar spreads, 100-year-old companies, blah, blah, blah. I have a bunch of different lists. That's all I have. That's how you do that. Okay, Joseph ACHR is at the most major support. In my opinion, it might bounce from this area, target, in my honest opinion. Okay. What's the date on the covered call? 4-wheel drive Jeep, I have no idea what you're talking about, because they're all different. Look at that, we're at 11 o'clock, cool beans. Oops, I'm at AVGO. Mesh, how are you today? All right, 4-wheel drive Jeep, you have to be more specific when you say what's the date on the covered call. I do weeklies, that's it. Creator, yes. Yaking. So you are waiting to get assigned with the covered calls is what you're saying. Basically, yes. Never heard of the Cleveland Clinic? Nope, sorry. WAU USD. Isn't that 4X? That means no. Yeah, sorry, James, no. Seb, it's the #1 hospital in America. Really? I've never heard of it. For Bank of America, Charles, for Bank of America, one contract will be about $3,900. Okay, Charles, I honestly don't know what you're talking about there. BAC, one contract, currently at $39.75. If I'm buying a contract, it's at 23 cents per share. That's $23. Okay? But that's buying. Okay. It's not what you care. It's not that you care. It's that you've never heard of it. Wild. Okay. My assumption is that you live in that area, Cleveland Clinic. So yeah, you would have heard of it. I come from Boston area. So to me, it is what I heard of is what do you call that? What the heck is a clinic in Boston? I've heard of South Shore Hospital. Well, that's where I'm from. That's what I heard. And Boston has Mass Eye and Ear. That's where I got the operation on my eye. General Hospital. That's in Boston. There's other ones in that area too. They have some really good hospitals in the Boston area. What's your #1 investment pick? Macy's. So sorry, I have never heard of the Cleveland Clinic. Johns Hopkins, I've heard of them. Opinion, AXAU USD. That's 4X, dude. I don't do that. Bama Redneck, thank you for the flowers. I gotta get some water now to water them. What do I think of Duke Energy? Jeffrey. DUK. Duke Energy. I think Duke Energy is a monthly. Okay? Monthly options? No. I don't do monthly options. Sorry, Jeffrey. Darbin Lee. Is it a problem to trade on one big account than multiple accounts with the same amount? No, not at all. The reason I have multiple accounts is there's a reason why I have multiple accounts. Okay? There is a reason. And yeah, it would probably be easy if I had it all in one. But it doesn't always work that way. Minty Fresh, AVGO. Great job, 90 minutes, blah, 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 AVGO. Didn't we look at AVGO last night? AVGO. It's at 161. Okay. Okay, here's our high. Here's our low. Here's where it was. Here's where it is. Went from $80 to $160. So it's doubled in price in a year. Okay, great. Balance sheet. That's the word I was looking for. Thanks, Mesh. So who figures out the book value? The person who figures out the book value are the accountants and all those people and the financial advisors. The balance sheet. What do they own? What do they owe? The balance sheet. Thank you, Mesh. I knew it was there somewhere. Okay, 161. So the one, I'm going to look like the 162s. Okay, cool. The 162s. Okay, cool. So both are over 1% for the 162s for AVGO. But let's take a look at the chart. Now, just because the numbers on the option chain look okay, what's the chart telling me? Well, the basics we already know. The 5 things we already know. The high, the low, where was it, where is it, what direction it's going. We already know that. But let's take a closer look to see what it is more specifically. A year ago, we were at 84.78, and we bottomed out at 79.27. That was a year ago, back at the end of September. Okay, so here's the high of the year, right here, 185.16, and that was in the middle of June. All right, look at the movement. Okay, goes up, comes down, goes up, comes down, goes up, down, up, down, up, down, up. Now it's coming down. Okay, it's like a seesaw. Remember the seesaws at school? up, down, up, down, up, down. You know, same thing. Okay, so the last 30 days, here you go. 30 days ago, we're at 166. We got a high at 172. Drops all the way down here to 135, bounces back up. Now it's going to the downside. So as much as I like AVGO, it's going to look better in 2 weeks. So we're going to write it down for 2 weeks. And we'll come and revisit it, AVGO. Because if you like a company, you should follow it. You should know exactly what it does every single week. If she goes up, she goes down, great. It's a nice company, don't get me wrong. It is on my list. But the chart is telling me, not today, sorry. Next week, it's not going to come down far enough. All right? So if she comes down, we got 2 days left. Do you really think it's going to come all the way down to here in 2 days? It could. It probably won't, but it could. Charles, does VFC consistently pay dividends? Well, I believe so. VFC. Okay, VFC got dividends all the way back into the 90s. Wait a minute. All the way back into the 80s. Yeah, so Charles, VFC has dividends all the way to the 80s. 4, 5, 6, 13, 14, 17, 25, 30, 35, 40, 43, 48, 51, 43. Oh, it went down. Went up and then down again. 49, 50, 51, 30. Uh-oh. Uh-oh. Check that out, Charles. Did you see that? It goes from 50 cents in 2022 to 30 cents in 2023 to 9 cents in 2024. No, thank you, VFC. Okay? That's not consistent profitability to me. That's a hell no. Move along. All right. Balance sheet net worth. Coach, okay. Mesh, 150 contracts. Someone has to buy all of it or none. So less buyers contact. No, not necessarily so, Mesh. Okay? When you do an option trade, now when you have more than 2 or 3 option trades, well, you got to remember, there are option houses in Philadelphia, in Chicago, New York. They're all over the place. So you can get 5 or 10 here, 2 or 3 here, 5 or 10 there, all over the place. Okay? It's not all or none. Okay? There is an opportunity to, when you do your trades, to say, I want to sell all of them or none of them. Yeah, I don't do that. I want to sell them. I don't care if you do 1 here, 1 there. You know, 1 in Boston, 1 in Chicago, 5 in New York. Yeah, I honestly don't care. But 150 contracts, yeah, they do sell. Logi? What the heck is Logi? L-O-G-I. Logitech. Oh, I actually have some Logitech, and it's a no. Okay? The reason why I say what the hell is that, because I don't trade it. Okay? If I traded it, I would know who it was. But it's a monthly. Monthlies just don't work for me or for this trading strategy. Look at this. We went down to 81 people. Holy cow. Energy transfer. We looked at energy transfer yesterday. Okay? ET. Energy transfer, and we figured out it was a little too high at the moment. Okay, here's energy transfer last 30 days. Here's our high, down, up, down, up, down, up, down, up, down. Now, I have no idea which way it's going. It's not that clear. If you like this, hey, more power to you. It looks as if it should be going up. But you had a down day yesterday, and today, well, it's closed lower than the high 2 days ago on Monday. So it's not clear, and there's too many other companies that are clear. So as much as I'm okay with energy transfer. Johnny wants to take a look at Intel. I love Intel. INTC. Okay. Intel. High, low, is direction. We're at 2077, a little bit of a pullback now. I do own some Intel, but currently the 21s For this week, I'm going for 28 if you like Intel. 2 days will get you over 1%. Next week's 21 is going for 59, just shy of 3%. Wade Wilder. So someone needs to buy 1,500 shares. Okay, Matt, OXSQ. I can say no now, Matt, if you want, or we can take a look at it and then say no. Okay, let's finish up with Intel first. All right, a year ago, Intel was 37.31, topped out the end of December at 51.65. Here's our bottom right here last week. Was that 18.55 last week? Now, that's 60 days we're looking at right now. See that chart? That's 60 days. Watch what happens when we zoom in and look at just 30 days. Total different story. 30 days. 30 days ago, we're at 21. We dropped down to 19.5, shoot up to 22, drop down to 18.30, shoot up to 22.5. Now we're coming down. Okay? Now, at 20.77. Okay? So I have no problem holding on to my Intel and keep rolling it forward. I'm new. Can you do an overview of what you're doing? MS Tammy. Oh, Miss Tammy, how are you today, Miss Tammy? Overview of what I'm doing. Well, this is a trading strategy I taught my 9-year-old. It had to be simple, safe, predictable, and consistent, and no way for her to lose. Great. 5 rules. Rule number 1, never buy something you do not understand. If you don't understand it, don't buy it. Rule number 2, never sell at a loss. Rule number 3, make sure the company is consistently profitable. Me, personally, I like 20 years of consistent profits. I use the dividends to tell me that, because the dividend is a portion of the profits, and if the profits continue to increase, well, the dividends continue to increase. So if they're increasing the dividends for 20 years, well, they've got to be profitable. Rule number 4, make sure the company has weekly options. I want weekly cash flow, so it has to have weekly options. 20 September, that's this Friday. 27th September, that's next Friday. For October, that's the Friday forward. Friday, 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 Friday. Every Friday, I want weekly cash flow. And rule number 5, make sure the numbers work. What are the numbers? What am I buying it for? What's the covered call that I'm selling against it? Is that 1% or not? I'm looking for a safe, predictable, consistent 1% per week. There's your overview. Less than 3 minutes. Cool beans. All right. Intel. So I do like Intel. I do own some. And I have no problem holding on to mine. If you wanted to buy some, yeah, you can get 2%. But you got to ask that question. And it's a very big, important question. Do I like Intel? Do I like it at this price? Very, very important. Do I like it at this price? And am I willing to hold on to it? Okay, so Miss Tammy, hope that helped you out. Enron. I think he only reads YouTube chat. That's not true. I got YouTube, Facebook, Instagram, and 2 TikTok channels. Okay, so reading all of them is not as easy as you may think. Now, how do you lose money? I give it to a female. No, I can't say that, sorry. Actually, females are better traders than males are. Do you ever buy less than 1 share? Yep. Okay, whoever wrote that, I cannot read it. Sorry, the only thing I can read. Now, I can speak several languages, but I can only read English. Sorry. How do you lose money? Well, you sell for less than what you paid for it. I meant, do you always buy 100 shares or 1 contract? I never buy contracts. I sell contracts and I buy shares. And yeah, once in a while I'll buy 100 because it depends on how much money I have. Okay. Now, like I said before, I like to have 98% of all my money invested at all times. I don't believe in letting money sit outside. I don't. So if I'm always investing, every once in a while, okay, I will collect a dividend and I'll say, oh, where'd that money come from? So now I have a couple $1,000. So what do I buy? How do you set up 2 screens, one side as chart, the other side as options? Okay, Mesh, this line right here, this vertical line smack dab in the middle, you click on it and you can move it. Okay, I can move it wherever I want. I can even go like this and now you only have one screen. Okay, this is part of Thinkorswim. So if you look at it in the far left, smack dab in the middle is a little tiny arrow right there. If I click on that, that gives me that vertical line. And I can take that vertical line and I can move it wherever I want. Okay? Airlines have historically lost money. Sadly, yes, they have. Can you tell me about your shirt? Gray Teddy. Sure I can. That's a no. Most of the time. Now, you're new here because I'm really good with names, okay? Most of the time, all right, I'm here and you guys you ask me to look at certain stocks. Okay, so this is the list for this week. It's a new week. Hardly anything here. Okay? This is last week. That's the week before, not much there. Okay, the week before, week before, week before, week before, so on, so forth, continue, all the way back to January. This book goes all the way back to January. So, 90% of the time when you guys suggest me to take a look at a stock, it's usually a no. That's a no. Okay? Underneath it, what the hell were you thinking? Some people ask me to take a look at a stock, and I look at it and they say, oh, this is a great stock, it has great dividends. I take a really good look at it and I think to myself, what the hell were you thinking when you bought this? That's the explanation for the t-shirt. Okay? Because if you think about it, all right, most people invest so at some point when they retire, they have money to live off of. That's what most people do. Okay? They look to build their nest egg bigger and bigger so when they retire, they have money to look at. What boggles my mind is some of the crap, literally some of the crap people buy. Stocks that are so obscure, I've never heard of them. And I'm thinking to myself, what the hell are you thinking? Okay? Because this is your money you're talking about. You trade your time, most people. Some people inherit it, you know, it's like, okay, well, I just inherited it. Okay, fine, dandy, wonderful. But most of us, okay, and I'm speaking for, the working class person, because that's who I am. I am a working class person. I've been working since 1973. I finally finished last year. I decided, you know what, I've had enough. I have enough money set aside. Okay, so anyway, besides the point, most people work 30, 40, 50, 60, 70 hours every single week. And they take a very small amount of money and they put it aside for their retirement. Great. But most people spend more time planning a family barbecue than they do with their investments. Because when you invest in something that looks absolutely like VOO, for instance, there's a lot of people pushing that thing. It pays 1.3% per year. What the fuck are you thinking at 1.3? Inflation is worse than that. Okay, there's a whole bunch of them like that. Okay, it's like, take a look at the numbers. What are they paying consistently? Are they consistently profitable? Okay, are they consistently profitable? Are they paying dividends? How long have they been in business? And is it a good, safe place for your money to be? Also, are you looking for capital appreciation, or are you looking for cash flow? Two total different trading strategies for both. I have no desire for no desire for capital increase. Capital. What did I just say? Well, don't get old. Some parts are fun, other parts are not. I went and played soccer the other day. It taken me 3 days to recover from playing for 1 hour. Okay, when I was in my 20s, 30s, even 40s and 50s, didn't take that long to recover. But now I'm 60, it takes a long time to recover, and it pisses me off because I want to go. See, I could have gone out and played on Saturday and on Sunday and on Tuesday because that's how many, because I'm in an adult league, 60s and over. There are a few of us out there, but it takes me 3 days to recover from playing for 1 hour. Okay, so anyway, let's go blah, blah, blah. What was that? All right. Okay, some more questions. How do I set up? Okay, do you track when companies announce earnings and do avoid trading around those days? Absolutely not. I honestly I get this question at least once a week. Do you stay away from stocks and earnings? I don't even consider them. I've seen positive earnings where stocks go down. I've seen negative earnings where stocks go up. Earnings don't really affect them as much as you would think. All right, Mo, we already looked at Intel. Okay, INTC, Intel, we already looked at that one. ONON, never heard of it, and if I've never heard of it, more than likely, it's going to be a no. Oh, holy cow, 50 bucks, and they have weekly options. Cool. Well, let's see how well they've done with their dividends. ONON. All right, sorry, dude. All right, Mo. ONON has no dividends at all. Okay? Now, I'm not quite sure if you knew this. The name of the channel is called Dividend Stock Talk. So why would you introduce me to a stock that doesn't have dividends? Okay? I'm a little bit worried about you there, dude. All right, so AT&T, huh? Just a plain old T. There we go. T for two. Now, AT&T is going to be a no for this week, and the reason why it's going to be a no for this week, look at the high right there. Okay? About 3 weeks before AT&T comes into play. So I'm going to put AT&T 3 weeks from today. Ooh, look at this. Now I have nothing on the list from 3 weeks. AT&T is the only one. Okay, 3 weeks from today, AT&T. All right, Fed cuts rates by 0.5%. Stocks will be nice for a bit. Okay. Creator, you need 100 shares to do one covered call. Absolutely. Badfish, CSCO, Cisco. We looked at Cisco the other day. CSCO. All right, CSCO, first thing I want to see. Here's the high, here's the low. Where was it? Where is it? What direction is it going? Look at that nice direction it's going at the moment. It's currently at 50.57, 50.92, so I'll be looking at the 51s. The 51s this week, nope. 51s next week, nope. Sorry. The numbers just don't work for CSCO. Sorry, bad fish. Okay, I like CSCO. Cisco is on my list. Actually, both Ciscos are on my list. But it's actually, hey, Gallant is here. Holy shit, dude. Where have you been? Anything ending with a Q is a no. Yeah, you're right about that. What do you think about Render? Never heard of it. Okay. All right, we're at 11:21. We are out of questions. All the questions are gone. Did I miss them all? I think I did. Energy transfer. How do I set 2 screens? No, I did them all. Holy cow. Every question is done and over with. Cool beans. Well, let's look at some other stocks that I have on my list from last week. Now, last week, really, Gallant wants to take a look at Mosaic. M-O-S. Mosaic. Here we go. High, low. Where was it? Where is it? What direction is it going? Look at this. Dropping like a rock. Finds the bottom, turned around. Now it's going up. I love it. I love it when it drops down, finds the bottom, turns around, goes back up. Stocks go up, stocks go down. Stocks find a bottom, great. The bottom, now they turn around, go back up. They get to a top, whoop, too expensive, they turn around, go back down again. You can call it whatever you want. I like to think of it as profit taking. Stocks go up to a certain point. If I bought it here and it goes up, yep, I'm taking my profits. I have no desire whatsoever to watch it. None. Okay, so Mosaic. 25.88 was the last trade. 26.56 is the current price. So the 26.50s for next week is going for 31. This week, no. So next week's 31 looks good. Why do you have 3 accounts? Club Med Tom, I have 6 accounts. And there's a reason why. Okay, there is a reason why. I'm just not sharing with you why the reason I have 3 accounts. Okay, I actually trade my grandson's account because, you know, he's 4. Okay. Let's look at the numbers. A year ago, the high was 40.58. Okay, that was the high of the year a year ago. Okay, she just drops and drops and drops and drops, and then she drops some more. Guess what? After that, she drops some more. Okay, look at the last 30 days. Here's the last 30 days. Doesn't that look pretty? Look at it. 30 days ago, we're at 28. Dipped a little bit, turned around, made the high at 29.50, and then we dropped all the way down to 24. Now we have 1, 2, 3, 4, 5, 6 days higher. 6 days to the upside. Cool. Look at all the space between here and the high. This got a long way to go up. I like that. That makes me a happy camper. Let's see what the numbers look like. 25.58, I can buy it for 26.50. The 26.50s for next week's going for 31. That's over 1%. That's a good pick, Gallant. Way to go. Procter & Gamble. VE wants to look at Procter & Gamble. Procter & Gamble is going to be a no. Sorry. Look where the high is. Right there, pulled back, blah, blah, blah. It's too close to the high. Okay? Don't get me wrong. Procter & Gamble's been in business for over 100 years. What stock is this? Procter & Gamble. PG, Procter & Gamble. Andrea, how are you today? Haven't heard from you in a while. Yeah, no. Sorry. Last one, Lulu. Yeah, no. Sorry. Lululemon has not been around for 20 years. I didn't even have to bother looking at that one. You read the comment too late. I did. I'm sorry. I read them when they pop up. Was in New Jersey, inherited a house. Cool. I never inherited a house. Oh, my parents are still alive. Last stock. Let's go. Let's take a look at it. What is it? Is that JJ? How are you doing, JJ? Or are you talking about what was the last stock? That was MO, Mosaic. Long call versus covered for Mosaic. Ooh, Miami. Good, cool. Raising hell, Mosaic. All right, Mosaic, long call versus a covered call. Chewy. MASH, Chewy's hasn't been around for 20 years, dude. You've been around long enough to know that. The one before Procter & Gamble was Mosaic. MOS. Still rise, thank you. All right. Okay. So, Gallant, you want to take a look at the long call versus the covered call for Mosaic. Now, when you say long call, you mean buying a call rather than a covered call? Well, let's figure that one out. A covered call is a safe strategy. A long call is not a safe strategy, okay? But people do it anyway. All right, so Mosaic, 25.88. The covered call would be 26.50 for next week. Okay, so the 26.50, here it is right there. The 26.50. Okay, profit 9.50. Let's do that one. 9.50. Divide that by the purchase price, 25,556. 25,556. That gives me a 3.7. Gallant, 3.7% at the 26.50 for next week. 3.7. That's a nice number, and it's a safe trade. Now, let's take a look at the long call. Now, when you're saying a long call, you kind of got to give me an idea how long you want the call to be. Okay? Yes. 3 weeks. All right. So 3 weeks on a long call. Now, are we doing an at the money call? Are we doing an in the money call? Are we doing an out of the money call? And which one are we looking at? Currently, the stock price is at 25.88. So you want to go 3 weeks out. That's the 4th of October. Okay, fine. Now, in the money, okay. In the money, 25.50. Okay, so at the moment, the 25.50 is going for $1.07. So your break even is going to be 26.57. So currently you're at 25.88. your break even is going to be 26.57, which is right here. Okay? That's your break even in 3 weeks. So it could hit 26.50 by the end of this week. That's your break even. Anything over 26.50 in 3 weeks, that would be your profit. Okay, so you actually have to go above the price. See, the purchase price at the moment, 26.56. So if you bought it now, okay, if you bought it now at 26.56, that's one thing. But if you're just buying the 26.50 option, that's 56 cents. So you add the 56 cents to the 26.50, so you're looking at 27 something, just to break even. That makes sense? Okay, and it is going to expire. 3% is a no-brainer for the covered call, it seems. Yeah. Okay. But if it was going to go, okay, in 3 weeks, you'd have to be up over 27. It would be halfway decent. And it is going to expire. Okay, so we're at 11:30. I'm going to call it a night. It is what? What is it, Wednesday? All right, so for tomorrow morning, for you guys in the morning trading group, for those of you guys not in the morning trading group, you can, if you want to, join up. It's $100 a month. And we trade Monday, Tuesday, Wednesday, Thursday, 9 a.m. until you guys are done. The funny thing is, I will stay on until you guys are done asking questions. And the same thing at night. If there's over 200 people, I will stay on longer. But we're down to 87. Like, people are getting tired and restless. They want to go to bed. Camping World puts 26. Matthew, how are you today? Camping World, never heard of them. Okay, so I wouldn't do them. But if you want to do them, hey, more power to you. Okay, it could be a good deal. I don't know. Because I have one thing I do, and that's it. Because I come from that time frame where if it ain't broke, don't fix it. Okay? My mother used to yell at me all the time. If it ain't broke, leave it alone. That's what she always told me. Because I was one of those kids always taking things apart, always trying to figure out how things worked. Yeah, so she always yelled at me. If it ain't broke, leave it alone. All right, so you guys have a great night. We'll see you again tomorrow. All right, catch you guys tomorrow.